Everyday chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Morning, everybody. How you guys doing? Hope everybody had a great Thanksgiving if you celebrate. And let's go over some of these markets. So this week so far on NASDAQ has been quite choppy. So here we can see Monday, we traded lower. We took out Friday's low, right? And then rejected away from this fair value gap. And then Tuesday, we got a nice closure above this bearish fair value gap. So now this is our inverted fair value gap. And this is the reason why I've only been leaning long. I got kicked out of these trades. So I was break even. I took one trade and ended up break even. I took a trade on Monday, actually, here, and ended up with 1R. So I guess on NASDAQ, I am up 1R, but I took a loss in gold. And I'll cover that in a little bit. So this was Monday, right? Overnight session. We got this run lower. During New York session, we got a nice close here, inverting this fair value gap, right? So this is our 4-hour inverted fair value gap. And then we continued higher. But the way that it's been getting higher is just drifting higher, right? So each one of these pullbacks, if your stop loss is not in a logical area, or if you're trailing it too tightly, you're getting kicked out of the trade. Because all this price action so far has really just been bouncing around the weekly open. And we didn't really get a nice run away from the weekly open until yesterday. So I should have probably taken off some profits here because I got long in here, which I'll go over as well. So I was long in here. I moved my stop up to 1R when this pushed higher, and then it came back and kicked me out. And then I got long again on Wednesday. Right, so Wednesday we have this inverted fair value gap here on the 5-minute time frame. And really I was just targeting these highs in here. But ideally I wanted to see it continue higher. I really should have taken something off. But I was aiming for a 1 to 3, not a 1 to 2. So you guys can see here that during New York session yesterday, right, ahead of New York session, traded higher, and then on the open, it came back lower again. And this kind of kicked me out of the trade. So, after running this low here, right, this is like our lunchtime low, then it turned around again. You guys can see that these bullish fair value gaps on the way up are being respected. Actually, give me 1 second. So when we have our higher time frame showing us that the market is bullish, again, I do not take bearish setups on the low time frame. So if everything on the daily is telling me that the market's going to go higher, even if you see a low time frame setup, I'm not taking those trades. So if I see a low time frame setup that looks bearish, I'm not taking that trade because it should fail, right? And we can see that that's happening consistently throughout the last few days. It looks quite bearish, right? But then it just rebounds. And then this looks quite bearish and then it just rebounds. So if you're trying to get short in a market that's overall high time frame bullish, if you're targeting liquidity levels, let's say you're just targeting these intraday lows in here, right? And then you get short again, targeting intraday low, right? Does it ever get there? No, because this market is just creating higher highs and higher lows as the market trades higher, right? And that's why I tend to just stay in sync with the high time frame. So again, if my overall target is this swing high here, then any price action that's running lower intraday is just an opportunity to get long. Because if you guys were trading on Wednesday, right, this is our Wednesday candle. This candle on the daily time frame looked very bearish. But really, all it's doing is trading into a daily inverted fair value gap, and it's trading down into this daily order block. So really, you're just trying to get long and stay long. So each time it's dipping down into a discount, it feels very uncomfortable to get long when the daily candle is bearish, but that's usually typically when you're trying to get long, okay? And my swing target is this swing high. So if it gets there, this idea is now cleared, right? It's off the board, and then we wait for the next setup. But right now, it's Friday. I'm not 100% sure if it's going to get there because it is a bit ways, and we've already ran out yesterday's high. But I am in a gold long right now. So this gold long, it's just based off a daily time frame. All right. So we have, I mentioned I don't typically trade gold. I may start trading gold just to get my feet wet and kind of understand the nuances of gold. Here we have, this run higher, running out this swing high. Okay, this is our external range liquidity. What happens after we take out that external range liquidity? This is usually where people short term are taking their profits, right? And then we see a dip down into this daily fair value gap. That's internal range liquidity. So our next external range liquidity is this high now, and eventually all-time highs. But as this market is creating higher highs, higher lows, right? I just want to stay on side with longs. I'm not going short because overall the trend is still pushing higher. So if we get a continued run away from this daily fair value gap, I'm going to stay long on the higher time frames. And this is my invalidation, right? So we have this swing low. This low was printed on Monday. Tuesday confirms the swing low, right? Because you need a low, lower low, higher low. That's our swing low. And now today, let's say if 8 hours from now, 9 hours from now, we get another swing low. Well, now this goes and becomes my invalidation. And until we lose this daily level, I don't necessarily need to close below a swing low. But if we lose the swing low, right, even if it just goes there, my trade is invalidated. Okay. And even if the daily comes lower, I'm still going to try and attempt long as you don't lose this low. But right now, the daily is bullish, and I want to see it continue. Although we'll have to wait and see because it is Friday and we're right around the weekly open. So I may just adjust the stop and let it, kind of move around. But as you guys can see, that this is very, very sloppy and sideways. Right, there are intraday trades on the lower time frame, but I'm not a low time frame trader. What I try and tend to do, even if I'm trading intraday, is I'm trying to intraday trade in the direction of the high time frame trend. All right, and that's usually where I make most of my money. I'm trying to find those mega trades, per se, right? Trades that last for very long periods of time, months at a time. And then trading for me becomes easy to follow. If I have a really good understanding of where a monthly or a weekly is going to go, or even a quarter, it allows me to stay on side more often than not. And, similar situation with NQ, you're going to have losers. But if the market continues higher, typically you should have a positive P&L over the course of, a month, 2 months, as long as this monthly continues pushing higher. So I already mentioned to you guys why I'm still bullish, but we had 1, 2, 3, 4, 5, 6, 7 months in a row that have been bullish. So it makes sense to just go down here and take out at least one of these monthly lows. Even just taking out one monthly low at least kind of rebalances the market a bit. It generates liquidity, right? People try and attempt going short, and maybe they put their stop loss above this monthly high. And then we get the continuation, right? So we got a run below an old monthly low all the way down here. And then you can see a very large reversal, right? But are you able to take advantage of this reversal? Because there have been deep pullbacks along the way, which is part of trading. You just have to understand that the market doesn't move in a straight line. And you guys can see that this week, right? If you got long on Monday, right? Maybe you've gotten kicked out of the trade, or maybe you've been manipulated into possibly thinking this market's going to go lower, and then it just slowly drifts higher, right? With each pullback, we get a rally. 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 And on the higher time frame, instead of you attempting to go short based on what you're seeing on the low time frame, you should be just buying every pullback that you see. And that's how you become a profitable trader, is when your trade alignment is in sync with the higher time frame. Because if you're trading against the high time frame continuously, you will be a losing trader, or you're going to have a very hard time, because counter trend trading doesn't provide the skewed risk reward that I'm looking for. What I'm looking for is skewed risk reward as the market is going higher. Do I have any tips and tricks for trading breakers? No, you just have to trade enough breakers. All right. The way that I learned to trade, honestly, was just focus on one setup. Maybe it's just a fair value gap. You don't need anything else other than a fair value gap to be profitable, guys. And I know it sounds kind of stupid, because people are like, or you probably look at fair value gaps and you're like, that's easy. The part that's not easy is understanding that you don't have to win on all of the fair value gaps to be profitable. All right, I have students that do homework, they do back tests, and they only trade fair value gaps in sync with a higher time frame. They may win on 50 to 60% of them, but on the 50 to 60% that they're winning on, the winners are like 3 times higher than the losers, and that's what you should be focusing on. All right, and then the other 50% of the losers, 40%, you're trying to have minimal losses. How do you stay long enough to let the higher bias play out? Well, if you're trading a futures challenge, you have to close at the rollover and just reopen it. Or if you're a swing trader, you basically have to wait patiently. Like, if you got long on Monday on NASDAQ, you would have just had to wait and sustain and manage this trade. And mentally, you have to be okay seeing it come back on you and then go higher, and then come back on you and then go higher, and then come back on you and go higher. Because the market, again, doesn't move in a straight line all the time. But if you're taking 50 trades in the meantime, right, you're exposing yourself to more risk than you possibly should be. And the same thing goes with intraday trading. If you frame a trade and then it goes a little bit in your favor and it comes back on you, and then all of a sudden you exit the trade and enter in the opposite direction. Whereas if you just held the trade and been okay with seeing your unrealized profit go up and down and up and down and up and down and up and down, who's outperforming? Compare 2 traders, right? One trader takes 20 trades up and down, and then one trader takes 1 trade on Monday and just holds it. And they end the week maybe plus 3R, 4R, 5R. But the person that's consistently trading intraday and can't hold their trade is taking losses on both sides. Who's outperforming, and who's working harder, by the way? Who's working harder for less money? The intraday trader. The intraday trader is in there trying to operate and pick these very small time frame levels to trade. Meanwhile, the person that entered on Monday just entered 1 trade and just held it through their whole week. All charts are shit. Oh, excuse me. I'm not sure if I'm allowed to curse here. I mean, a lot of these markets are kind of choppy. Like dollar, right? We took out some equal lows. I'm not sure if I talked about this last week. I wasn't on last week, actually. I was, because of Thanksgiving. So we have this inverted fair value gap. All right. And then here, this was the 1st of December, which I believe was Friday. No, Monday. This is Monday. And then you guys can see Tuesday, we ran out Monday's high, and it set up these equal lows. So these equal lows got set up on the dollar, right, on Monday. And then Tuesday and Wednesday, they go run them out. All right, so that to me is engineered. But for the time being, right now it's Friday, we might see a bit of a retracement on the dollar before we continue lower. I'm expecting the dollar to continue lower. All right. Because if we get a nice bearish weekly close here, I'm going to continue leaning short. And overall, I'm quite short on the dollar. And I've talked about this kind of at length with you guys. Right? Nothing has really changed about this quarterly chart, right? And I mentioned this quarterly fair value gap. So what if we just came up here, took out last quarter's high, and then we roll over? Okay, that's kind of what I'm watching, is maybe we take out last quarter's high, and then we roll over, and then eventually target these lows down here, right? Because we've ran above this high, and we've really struggled to push higher, and then we get a nice breakdown here. All right, so this market currently, over the last few quarters, has created lower lows and lower highs. All right, this is a high, low, lower high, lower low. So overall, nothing has really changed about this market, and the intraday charts really don't change my opinion of where the market's going to go on the higher time frame. Yes, it can still trade higher, but at some point, I'm going to try and get short on the dollar and long on foreign currencies. So you guys can see here on the euro, we didn't take out the quarterly low. So that's SMT here. I mean, I just covered the dollar. So what are you anticipating on the euro? Right, the opposite. If I think the dollar is going to go lower, euro shall go higher. And we didn't take out the quarterly low, so there's SMT there. It's showing strength in the euro. So you should see strength in euro pound. All right, so if euro pound continues higher, and maybe we go and take out these highs, you'll see euro trade much higher than the pound. That's not to say that pound can't go higher, but euro right now is stronger. And just flipping between both these charts, which one looks stronger? Euro or pound? Right? This quarterly candle is much greater than the one that you see in the pound. Do I always wait for pullback after the 4-hour engulfing candle print before going long? Not necessarily. It depends on a multitude of things. If I can't sit in front of the charts, maybe I'll just enter the trade and be okay if it retraces against me. Because I'm not trying to squeeze the market for the most risk reward. I just care about profitable trades. So even if I can get a 1 or 2, I'm okay not getting a 1 to 5. Because I think your entries don't need to be precise. I think your stop loss placements and your targets should be precise. I show my indicators. Just ICT everything, power of 3, and then fair value gaps. Which you don't need the fair value gap one. I think it's better if you just learn how to plot them on your own and watch them. No, so with the news events, I don't look at the actual numbers. Because the other day, you guys probably saw it, right? Jobs numbers were pretty bad. Right? They were pretty bad. And then we got the rally. Because honestly, the charts will tell you everything that you need to know. No, there's analysis on news, but it's more so like, when do I expect volatility to enter the market? All right, if I see news come out and I see the market dip down into a daily inverted fair value gap, I'm trying to position myself long in here. Right, because I'm anticipating that run lower is just manipulation. But yeah, this market has really it has been drifting higher, but the way that it's getting to this level is very sloppy sideways. No, I don't try and predict any of that stuff. Because nobody really knows. It's just, you know, you're kind of throwing darts in the dark. And I just trade based on what I see in the charts. So if the daily is continuously making higher highs, higher lows, I just continue staying long. All right, so Monday, even though this is a bearish engulfing candle, you have to read the context behind it. It's a bearish engulfing candle, but it's trading down into a daily fair value gap, and then it rejected the Friday low and closed higher. So this long wick down here, now that's an engulfing candle, but it's not in the right context because the market is going higher. So again, you're not supposed to be trading setups. You need context behind the setups because not every setup is going to work. If you're trading against the high time frame order flow and the trend, it makes things much more difficult. Because I can point out two bearish engulfing candles that I typically trade that I would avoid because the market on the higher time frame is not telling me to go short. Right? You guys can see both of these trades would fail. And this is what I didn't know earlier in my career. I was just trading setups without the context. You guys can see both of these highs being broken. All right? And in order for you to become a profitable trader, you're just trying to filter out losing trades. This is a trade or a trade setup that lacks context because the market's going higher. Right? And if you're trying to become profitable, an easy way to do that is by understanding your losers. You know, are you taking good losses or are you taking bad losses? If I would say if you're taking a short here when the daily time frame is telling you it's trying to go higher, that's a bad loss. And when you filter that out, it helps your profitability. You know, maybe if you're a losing trader, maybe filtering out those losers gets you to break even. And if you're a break even trader, if you filter out those losers, now you're profitable, right? What do I do when journaling becomes tiresome? I tend to take a break from the markets. Like if you're burnt out and you find that you can't journal, is maybe because you're wasting so much energy trading that you don't want to journal, or maybe you're taking losses and you don't want to journal those. But you have to understand that losses are really where you learn. You learn from the losses. You don't really learn from the wins. So there's a difference between good losses and bad losses. Usually when you take bad losses, it's very difficult to journal because you have to be honest with yourself. You have to say, you know, I took a trade, but that really wasn't in my plan. You trade setups. Well, you have to understand context on the higher time frame. And for me, 15-minute setups, I only take if it's in sync with the higher time frame. Because if you take a setup, like I'm showing you guys right now, this is the low time frame setup. And same would go for you if you're trading a 15-minute or 5-minute. But the hourly is telling you something different. Right? This is a 4-hour setup. But if I flip to the daily is making higher highs, higher lows every single day. Right? Other than Monday. Monday took out Friday's low. What did Tuesday do? Higher low, higher high. So the next day, if you see a 5-minute bearish setup, would you take that? I wouldn't, because I'm only trying to be long. So when I sit down in front of the charts at night and I try and determine what I'm trying to do the following day, if I want to be long on this day, why would I take a short based on what I'm seeing intraday? You're going against your plan, right? And then by the end of the day, it closes higher, closes bullish, and it creates a higher low and a higher high. And you're going to be kicking yourself because when you take that short setup and the market goes higher and you were supposed to be bullish because that's what your plan was coming into the day, you're going to kick yourself because not only did you take a loss, but you missed out on the win. And you're going to be like, well, I should have stayed long. Yes, you should have. Why are indices moving so slow this week? It's December. We're coming into the end of the year. You know, the retail mindset is that you can trade every single day and every single month. But the reality is that you have to put yourself in the shoes of very, very large traders, traders that are managing 8 figures, right? 7 figures, 8 figures. What do you think they're doing? They're not trying to make all their money in December. Okay, their years are pretty much basically wrapped up. Because what happens if you come into the markets and you're profitable all 11 months and then you're trading markets that are pretty slow going into the end of the year? You're not trying to give it back on the last month, right? A lot of those guys that have made their money for the whole year are done, right? And if you're an intraday trader, you know, you guys can probably attest to that. If you typically if you try to hold through like lunchtime and stuff, those trades can come back on you. How do you optimally trade a breaker? There's only one way to trade a breaker. When you see the breaker, you go long when it's retesting it, or short when it's retesting it. So let me mark out a breaker here. All right, this is our swing high prior to running out liquidity. So you run out liquidity here. You're waiting for a break above it and a retest. It doesn't retest until all the way back here. Right, and then this breaker overlaps with the fair value gap. That's when you go long. If you're trying to trade a break, maybe this is going to turn into a breaker, but we have to get a break above it first. All right, so this up close candle runs out liquidity. How many pips do you target? It depends on what the market is showing you. I don't have just like solid pip numbers. I don't enter trades and say I want to have a 25 pip stop. It's whatever the market is giving you. So if the daily range on the euro is 100 pips and you're trading a daily chart, I'm not using a 10 pip stop loss because I want to use a 10 pip stop loss. Right? If I have to put my stop loss below a daily low, I don't know how many pips my trade is going to be. I have to put it below the low that makes sense. And then you just adjust your position size accordingly. So if the stop loss is really wide, that means you can't trade the same size. Seeing anything I like today? No, I'm already in gold long from yesterday. Yeah, the market is deciding how big your stop loss is. And if the stop loss is too wide and you can't get your risk under a certain amount, then you just don't take the trade. Or you have to size down until it meets your risk parameters. So let's say, for example, I wanted to go long right now, and I want to put my stop loss below this low. And let me just hide this. Let's say I wanted to go long on gold right now, but my stop loss logically should probably go below a swing low, or maybe one of these 4-hour lows, right? If I go long, and my stop loss is 4225, this is telling me how much risk it is, right? If I'm comfortable risking $100, that means I can't take the trade, right? Because the market is deciding where I put my stop loss. I'm not deciding that. If I want to risk $100, that means I can't. And I'm not just tightening the stop loss so I can get a $100 risk on. I just don't take the trade. When would you trail stops? Well, I need market structure to tell me. And I need other information. So we have this fair value gap, right? This 4-hour fair value gap here. Now it's reasonable to put your stop loss below this low, below this 4-hour candle low. Because the market is telling me that I can move my stop loss because it shouldn't violate this fair value gap, right? But yeah, right now the markets are a bit slow. Gold's moving, right? I keep my position open through the weekend? No, probably not. Yeah, TradingView does calculate it. And even if you don't use TradingView to trade on, you should be calculating risk somehow. A lot of brokers don't offer that option, which to me is stupid. It's like a retail trap almost. They don't want you to know how much risk you're taking, but you have to do it as a professional. And if you're not doing it, then you're not a professional. What's the first thing I check when determining bias? Very simple. These two things should help you determine the bias. That's it. This is it. Why do you think I have these blue flags on here? Because I'm bullish. So when I sit down and analyze my charts on the daily time frame, what is the market structure? Bullish, right? When was our last swing high that we broke? Where was the last swing high that we broke? I'm asking the chat. Where was the last swing high that we broke, guys? Nobody know. Does nobody know? 19th? No, the 20th. This is the last swing high. You guys know what a swing high is? If you don't know what a swing high is, then what are you doing on this stream? You have work to do. Oh, not the 25th. Well, yes, it broke it on the 26th. This is the last swing high. None of these candles in here are swing highs. When was the last time we broke a swing low? Of course we know, then why hasn't nobody's really mentioned it? We haven't broken a swing low in like 2 weeks. Right, this is the swing low. Where's our next swing low? All the way over here. So why are you trying to go short intraday? Right? If you were to sit down and have a checklist, yes, there's intraday shorts, but the market is drifting higher. And until we break a swing low, I'm not going short. Yeah, it's simple. It should be simple. It should be simple. But the problem is a lot of you guys sit down in front of the charts, see stuff on the low time frame, and then you don't have a plan coming into the markets. You're just in here trading to trade. And what I don't do is I don't sit in front of the charts and just take random trades on the low time frame. because I have a gut feel. The gut feel it loses money. Your opinion loses money if it's not based on data. The data is telling you the market's going higher. It's whatever higher time frame that you guys use. You know, it could be monthly swings, it could be weekly swings, it could be 4-hour swings, it could be daily swings. I don't care what you use, but I always defer to the higher time frame. So if the higher time frame, right, on a weekly time frame, what did we get last week? We got a swing low. So until we lose this swing low, I just continue remaining long, hopefully to new all-time highs. Right? Until maybe a swing high gets printed, and then maybe I have to reanalyze what I might do the following week. How am I able to trade one pair only? Well, I don't really trade one pair only. But when I sit down in front of my charts and I do my analysis at the end of the day, I find trades that really jump out to me. So gold kind of jumps out to me more so than NASDAQ, because the way that the index markets are moving is very choppy right now. Right? And this is why I don't trade a lot, because I don't see a lot of trade setups on the higher time frame. Because even when I'm intraday trading, I'm still trying to trade in high probability scenarios where the higher time frame jumps out at me, where I'm like, okay, this is definitely going to go higher, or this is definitely going to go lower. And that allows me to filter out all the noise that I see on the low time frame. So again, all the noise that you see on the low time frame, bearish fair value gaps or bearish liquidity raids, all those are going to fail. They're going to fail. So if you guys see here, these bearish fair value gaps, right? Bearish fair value gap or bearish order block or a raid on liquidity. Those aren't really raids. It's just you're not trading in sync with what's going on in the higher time frame, because all these things will fail. This high becomes a market structure shift. These broken fair value gaps become inverted fair value gaps. Right? And we should be respecting these bullish fair value gaps as the market goes higher, because it's in sync with what I anticipate on the daily. Because until we lose this swing low, until we lose this daily fair value gap, I don't do anything. Right? How many pairs do I trade? Well, I have a very large watch list, but I'm really only trading like 4 of these: Euro, Pound, NASDAQ, ES. Maybe now gold. All right. But this is how I do my analysis. At the end of every day, I'll sit down and I'll mark out what I anticipate on these markets. You guys can see here that this is neither red or blue. This is neutral for me. So when it's neutral, I don't even look at it. Right? Like when the euro has already ran out the buy side liquidity, I tend not to do anything. Right now, this market is just stuck in a range. So until we start losing daily lows, until we start breaking swing lows, I just continue staying on side and attempting long. Well, so if a market rejects a high but still fails to break market structure, well, is it breaking market structure or going the other way? Because if it's not, then it's really just creating higher highs, higher lows. And that's what we've seen here the last 2 days. So it's come up and it's slightly rejected this high and come back down, right? But it doesn't close above the high. But it's still creating a higher low, higher high compared to the previous day, right? Each one of these daily candles is still creating a higher low, higher high. Now, just because you see it rejecting intraday does not mean that this daily candle is going to close bearish, right? Because 8 hours from now, this market could turn around and push towards our target. But as long as we're not losing higher time frame levels, right, I'm just waiting patiently. What's my average hold time? It varies tremendously because I trade intraday, I swing trade sometimes. If I take a swing trade, I know I'm going to be in that trade for a very long time. Or what I would anticipate is a very long time. To me, a very long time is not the same as you thinking intraday. Intraday, if you're an intraday trader, you probably think 4 hours is a very long time. As a swing trader, though, more than 3 days is a long time. Because as a swing trader, I went long back here on Monday, but the market has been just going higher, chopping, going higher, chopping, going higher, chopping. That's a very long time to be in a trade that maybe is only giving you 2R. Why did I take the long in gold? Look at the daily. You have a daily fair value gap. Why do I care what I see on the 4-hour? Do those 4-hour fair value gaps exist on the daily? So if I have a trade idea in mind, I'm only looking at reasons to get long. Right? So if this is a swing high, right, we have a market structure shift. What do I do from the 7th to the 18th of when? November? Or December? What are we talking about here? What would I do on NQ from the 17th to the 18th? Seventh to the 18th of which month? November? It did break market structure though. Are you talking about on the daily time frame? We have a market structure shift that's back here. All right, so this is a swing low that's broken. And then we create lower highs, lower lows. All right, here's the low. And then this is our lower high over here. We get a swing high, and then it rolls over. Then we get a bearish fair value gap, and then it rolls over. Yeah, the setup is fractal. Why do I not trade the 60-minute chart? Because I don't want to be in front of my charts all day long. I saw a tweet the other day. Somebody quoted Qualmaggy. Qualmaggy is like a very large 8-figure trader, maybe even 9-figure. You know, he said once you hit a certain dollar amount, why would you want to day trade? Day trading is like another full-time job, and I didn't get into trading to have another full-time job. If I put my stop loss, I'm taking a daily trade below a swing low. Let's say if I take a daily setup right now, I would have put my stop loss below the swing low. And if I'm targeting all-time highs, you're gonna have to sit in this trade for a very long time though, because each one of these candles is a day. It might take 3 or 4 days just to get to 1R. Unless you can zoom in onto the lower time frame and then find a setup. All right, and that's typically what you should be doing is finding a lower time frame setup based on the higher time frame. I don't look at pound New Zealand dollar. you can trade the New York Open every day, but as long as you're in sync with what's going on. Most people struggle with intraday trading because they're losing sight of what's going on in the higher time frame. So if you're looking at this as like a breaker, I would say this down close candle, right? You want to see it continue lower. It's already retested that level. Yeah, if you're short on the daily bearish breaker, let's say you went short here on this day. Maybe your stop loss is all the way up here, or 50% of the breaker, or maybe all the way at the high. And your target is all the way down here. You have to sit in this trade for a very long time. Or just anticipate that you might have to sit in it for a very long time. Not every trade that you enter is going to go straight to your target, right? It's going to go sideways until it gets there. I mean, look at NQ. If I think that this market is going to go to the swing high, it doesn't go there right away, right? Let's say you got long inside of this daily fair value gap here on Monday after taking out Friday's low, and then you put your stop loss here below the low of this fair value gap. Right, and your target's all the way up here. If you're trying to wait for it to hit that target, it hasn't gotten there yet. Maybe you could have taken partials up here. But right now, you're just, it's just it's a waiting game. I do monitor the New York session, but I'm not like intraday trading it. And why do I not intraday trade and trade a lot? Because I just put size behind the trades that I want to trade. Because it doesn't feel good for me, at least if I'm putting a couple $1,000s of risk on and I get stopped out because I'm trading a 5-minute candle. Like losing that much money in 5 minutes feels really bad. And it makes you overtrade and revenge trade. Like, I would rather take a 4-hour setup, and then at least if I lose over the course of a day, 2 days, it doesn't feel as bad mentally. Right? It just helps me avoid the mistakes that have plagued me in the past, which is overtrading and over leveraging and revenge trading. Because I'm not getting a swing trade every single day. And I don't need a swing trade every day. When you have capital behind you, you don't need to take a lot of trades. So as I mentioned, we took out that yesterday's high. But again, I'm not bearish until we lose one of these daily lows. Because very similar thing happened yesterday where we came back towards the previous day's low, and then it got a push higher, and it went above this high here. All right, so it got very close to the yesterday's low. This could have been a very short-term trade. If you got long here on the close, or your stop here, and your target above the high. It's not the best risk reward in my opinion, but that's the setup, right? And I'm kind of staying away from NASDAQ just the way that it's trading. If I look at gold on the daily just seems clean. Cleaner than Forex and cleaner than all these other markets. For the time being. That doesn't mean it's going to remain like that forever. But when I'm trading, again, I'm looking for the high probability setups. When we get a daily rejection from this daily fair value gap on this day, the next day becomes a very clear short. And that's a day you can just intraday trade. But for me, it needs to really jump out on what I'm going to anticipate the following day. Negations and breakers are, yeah, to me, they're basically the same. I'm not saying your NQ short is bad, but you have to have logic behind your trade. Only you can answer if the short is bad or not. The way that I trade personally, I would not take a short because the market is creating higher highs and higher lows. And just because there's intraday setups on the low time frame, I'm not worried about that because I'm trying to put size behind very large moves in the market. When trading on prop firm accounts, to trade on higher time frame would take a long time to pass, right? Yes. My question is, why would you care about how long it takes to pass? You need to make money right now, right? That's your mindset. I need to make money right now. The people that make the most money in trading are the people that don't need money. You know, it's just as simple as that. If you're struggling financially, you're going to force trades. And you're going to cut trades early. You're not going to let your winners run because you see that money and you're like, no, I need this money. Yeah, commodities are actually based on supply and demand. How do you determine your premium discount range? Well, the last swing high, the last swing low. But when a market is bullish, if it's in a premium, it could continue going into a premium. But you have to be very cautious is the thing. But right now, index markets are hard to trade because when you keep pressing all-time highs, all-time highs, all-time highs, you know, you're just not trying to be the guy that's over levered at the top. Right? Because where you're trying to enter is all the way down here after we take out a low, a monthly low. That's when you're trying to enter long. What sample size of trades is decent? Well, first of all, if you go through a backtesting session and you're not following your trades process, then all that backtesting data is useless. Right? So what I tend to do with a lot of my students is I just have them only take fair value gap trades. Get 100 fair value gap trades in line with a higher time frame bias. That to me is a good sample size. And don't add anything else to it. Don't add liquidity rates. Don't add breakers because now you're polluting your data. Yes, if you want to learn a single concept like breakers, ignore everything else. Yes. Ignore everything else other than bias. Like, you should be coming to a conclusion of where you believe the market's going to go and only trade breakers that are going in that direction. Like, if you're bullish, you're only trading bullish breakers. If you're bullish on the high time frame, you're only trading bullish breakers. If you're bullish on the higher time frame and you're trading bearish breakers, what are you doing? And that, again, that higher time frame could just be based on an hourly time frame. But I tend to think that lower time frame gives you more time to think because how many of you guys even have a hard time sitting down and analyzing the high time frame properly? You know, I don't know. It took you guys a little while to tell me which was the swing high that broke. That's on a daily time frame. If you have to determine what the last swing high that broke on an hourly time frame is, you can't analyze the data fast enough. Right? You're not trying to make things harder than they already are. Trading is hard as it is. The lower time frame you go, the harder it gets because you have to analyze information faster. So why not just slow down instead of blowing 100 accounts on the 5-minute time frame. It's way better if you take a whole month before you blow the account, because at least you're slowing your process down and following it. So for me, like, has anything changed on the higher time frame that this is going to signal bearishness? No, we haven't even lost the previous day's low. Right now, it's just 50% of yesterday's range. And I mentioned this yesterday in my group. I prefer to take losses in the direction that I'm intending to go. Because if you have wins, but you break your rule, let's say if I came to the markets today and I wanted to be bullish, but instead I went short and ended up with a win. Is that good? Do I rate that as a good trade? No, I don't, because I didn't follow my plan. I don't care about the P&L. Just because you want to trade doesn't mean it was a good trade. Could have broken your rules, which you did, right? And long term, that's going to hurt you. Do I take partials or do I trail with full volume? Most of the time I trail with full volume, because when you take partials, it kind of messes up your expectancy. If I'm bullish on the daily at Sunday night, would you wait to see, Judas confirmation on Monday, Tuesday, Wednesday? Yeah, I mean, like, let's just go back to the weekly time frame on NASDAQ. This last week was very, very bullish, wasn't it? And we got a swing low. And what? We broke above this opening price. So this week, I am only trying to go long. And when do we get our Judas swing? On Monday. This is our Judas swing, right? Monday, trade lower. I'm not taking the bearish engulfing candle because that's not in line with the direction I'm trying to go. I'm trying to get long, so I avoid all the bearish setups. Anything I see that's bearish, I avoid it. Any runs above old highs, any bearish fair value gaps, I avoid it. And when we invert that, which we did on Monday, right? We inverted this during New York session. That's when I get long, because now all of a sudden my low time frame is in sync with my high time frame. Because I'm only, at the close of last week's candle, I am only trying to be long. I am not taking any shorts. Thoughts on someone that doesn't force trades but hesitates and fear to enter? Why are you fearful? I argue you're fearful because you're afraid of losing. And in trading, you're going to lose, and you're going to lose a lot. It's just something you have to get over. But you can lose on 50% of your trades and still make really great money. I want to bring up and show you guys my Tradify stats. And this was around the same period of my Apex run. Okay? And I'm just going to show you guys my win rate and all that. Give me 1 second. How to deal with losing? You just get used to it. You just have to get used to it. There's no advice that I can give you. You just have to get used to it. This is the experience that you have to get on your own. You have to lose and be okay with it. You have to lose a lot and be okay with it. And you have to take stop losses and be okay with it. Oh, it's taking forever. Hold on a second, guys. Here we go. You see this equity curve? What would you guys think my win rate is? How would you know it's 35%? You've probably seen this before. That's why. My average win, average loss, right? Almost 3 times as much as my win. Or almost 3 times as much as my loss. My win rate, 35%. This is over the course of 3 months. You don't need to win on all of your trades to get equity curves like this. You just have to size up on the winners. Okay, this means I get it wrong a lot. And yes, my best months are 70%. No, this is 3 months. This is from February. This is from the beginning of January, actually. So here's February, March, April. Now imagine Apex, right? Apex, I was on that same run across 20 accounts. You don't need to win a lot to make a lot of money, guys. And that's how you get comfortable losing, is by trading long enough to see that data in front of you. If you don't have that data and you've never seen the data in front of you and you abandon your strategy because it's losing a lot, then you have a problem with risk management. I add into my positions. So like on gold, for example, if I'm able to get my stop loss to break even, let's say I move my stop loss here to break even, I can place another trade now. And let's say my daily target is way higher than where it is right now. As that market goes higher, now all of a sudden, instead of me having 1 position on, now I have 2 on. But if I get stopped out, I'm only losing $1,000. And that's why when I look at this, my average loss is only $1,000, because when I'm sizing into those trades, some of these trades are more than $2,700, by the way. This is just my average. There were some trades where I was only risking $1,000, making 5, 6K, 7K, because I scaled into the trade. You know, to me, it doesn't matter if the market's moving in your direction or against your direction, as long as you can trim the risk. Because if there's a lot of momentum, the market's going to keep going without you, without pulling back. So I would not be surprised to see this market still get higher, trade higher. Because this is really just trading down to this level here. And let's say if this 4-hour candle creates a low here, this market is still creating higher highs and higher lows, right? Only 2 trades this week. I've taken like 3 trades. 1 win, 1 loss, 1 break even. So I'm break even overall. And maybe this gold trade will pay me out 3R. Hopefully. 2.78. And I'm okay just ending my week there. Because I'm not trying to trade a whole lot right now. We're going into the end of the year. All right. But you getting comfortable with losing takes time. It takes you seeing your equity curve go higher, even though you're losing on 70% of your trades. You don't need to ask me what my max loss is for the day. What's yours? And are you sticking to that? What's your max loss for the day? And have you been sticking to it? All right, don't put this on me, because I'm already a profitable trader. If you're tuned into the stream trying to become profitable, don't look at what I'm doing. I'm giving you guys the framework of how I trade and some advice on how to avoid losing. Okay, Digital Meek said $500. How many of your days have you lost more than $500? And is that something that you have an issue with? Because if you have a $500 daily loss, your winning days should be $1,000, $1,500, $2,000. That way, when you look at your data, you know what you need to work on. Okay. So if you're keeping your risk at a certain level and you're losing $500, $500, $500 consistently, at least you know you're working on that and you have that down pat. But your winning days are $200, $300. Now, all of a sudden, what do you need to work on? What do you need to work on in that situation, guys? Let's say if Digital Meeks is risking $500, but his winning days are only $200, $300. Okay, Digital Meeks, you're hitting $500 to $1,500 winnings on average, then you should be a profitable trader, right? Are you a profitable trader? Okay, so we've already cut down the fact that he's losing $500 a day. And we've already deduced that he's making $500 to $1,500 a day. So on paper, he should be profitable, right? If he's not, then there's some other issue going on. Okay. Sometimes you get greedy. Okay. Maybe you're breaking rules. Maybe you're over trading. Maybe you're hitting the $1,500 going back in the market and then losing it. That is what you need to identify and fix. Yeah, it comes down to the psychological side, and maybe your exits just need to be a little bit better. But trading is all about just letting your winners run and cutting your losers short. Because when you sit down at the end of the month, your P&L should look like this. It should look something like this, right, guys? Whoops. And maybe you have some break evens in here, right? Well, you should not see trade days where it's like this. You should not be having days where it's like you're doing all this work, you're profitable, and then one day you blow up. All right? So when you look at your P&L calendar, you have to understand that if you just keep your risk management proper and you're trading the setups that you should be trading, then you should be a profitable trader. But if you're trading and you have profitable days, you have losing days, but then you have days where you break all your rules, that's what you need to fix. This is, I think, a very simple process, and I think a lot of people overlook how simple trading can be and how easy it can be at times. But the problem is your perception of the markets and how you're treating trading mentally. If you are trying to pass challenges too fast, if you're trying to make money too fast, fear and greed are the biggest reasons why traders fail, is because they can't detach and observe themselves making these mistakes. You have to become the observer, right? Right now, everybody's a market participant, and they participate in the markets without observing what they're doing wrong. So if you're consistently oversizing, that is the participant in the market doing that. If you can step outside of your body, if you had a friend that's right next to you and you know risk management, you know all these things, you learned all these things in the first couple months that you started trading. And you tell your friend you shouldn't be risking more than $500. What would you say to your friend if you see him risking $1,000 on a trade? You would tell him to size down. Well, you have to do that for yourself, right? Because you are in control of your own ship. Yeah, most people are willing to take small profits, but they hold on to the losers. Yes, true. Right now, I'm still bullish on NASDAQ. If you join late, I'm still bullish on NASDAQ. Why? Because everything on the high time frame is telling me it's going higher. Yesterday, even though it closed bearish, it created a higher high, higher low. And until we lose a daily low, until we lose a swing low, I'm just going to remain long. Now, you wouldn't want to stay away from that friend because he would tell you the same advice that you're giving him. If you tell him to risk $500 and you see him risking more than that, if he, in the same light, if he sees you, he would tell you the same thing. Right? But you both are breaking the rules because you're the participant. You're the participant. You're the one making the decision to oversize and take that larger trade. I'm not saying there's anything wrong with taking a larger position, but you have to do it in a logical manner. If you know that you're going to take a larger position, you have to be comfortable with that risk. So yes, you can have some outsized losses here and there, but as long as you planned the outsized loss, let's say you see a trade that you feel very, very confident in, you can size up reasonably and risk something more like 2R. I honestly think you could remove all these other things like standard deviation, right, Asian range, all that stuff, and just follow market structure. Because at the end of the day, guys, the market is just going up and down or sideways. This is not rocket science. If it goes up and you're long and you don't make money, you have things that you need to work on, whether it's the entry, whether it's the exit, whether it's the risk management. But it's going up, right? The market, if the market's going up, it's going up. Does it matter if it rejects a standard range deviation or if it's just following moving averages? If somebody that's trading moving averages and you're trading ICT, if you guys come to the same conclusion that you want to be bullish on the markets, does that really matter? Does it really matter? Because in the markets, there's people that are bulls and there's bears. Right? And pigs get slaughtered. So either you're a bull or a bear or you're neutral. How you come to that conclusion doesn't matter. And then your strategy is what gets you in sync with the market. Because there are traders out there, trust me, there are traders out there that trade moving averages and pivot points and Bollinger Bands that are making way more than even some of the best ICT traders. And there's ICT traders that are making way more than the moving average traders. It's a give and take, right? Like strategy to me has very little to do with profitability. And it has everything to do with your mindset, your psychology, your discipline, your consistency. All those other things to me doesn't matter. Okay, I can give a profitable strategy. I just went through a profitable strategy with you guys. It could be as simple as coming up with a bias. Is the market making higher highs, higher lows? Is the market respecting or disrespecting fair value gaps? You can change this second one to whatever. You're coming to the same conclusion, right? And then it's just about your entry model. Once you're in the trade, though, that's where everything gets difficult. Because a lot of people cannot sustain being on a losing streak that looks like this. 386 losses and only 212 wins. Mentally, you need fortitude to have this work out. But over time, when you see this equity curve, because you're sizing into the right positions and you're managing your risk effectively, now all of a sudden, losers become just another part of trading. Exactly. Most ICT traders are unprofitable for the same reason as everyone else. 100%. That is 100% the truth. So I hate seeing people arguing on Twitter over strategy. Because to me, the edge is really the trader. You can give a profitable strategy to 100 different people, and probably 80 to 90% of them are going to lose because they don't have the right psychology. They don't have the right mindset, and they don't have the right risk management. So I'm gonna hop off here, guys. How do you deal with losing streaks up through the year, but November, December are giving me losses? I tend to never really do well during November, December. That's just me. That's historically data wise, November, December for me very slow. And I know when to slow down because it's holidays. It's the holiday seasons. Big traders are not, I haven't really seen major moves occurring around holidays. I can't check my Discord DMs. I have way too many people requesting me. If I fielded questions on Discord all day long, I would have no life. So I'm sorry, but you can message me here and I can answer questions. But outside of that, I don't have the time. I have too many people messaging me. So I'm gonna hop off here, guys. You guys already know what my thought process is for NQ. Dollar index, I'm pretty flat on. So currencies in general, I'm pretty flat on. Although I do want to get bullish, like I mentioned, long term. I want to get bullish on the euro up to these highs, and I want to be short on the dollar down to these lows. So I think if the dollar continues lower, a lot of these risk markets like NASDAQ, gold, foreign currencies should run higher. Okay. So I hope you guys enjoy the stream, and I'll see you all next week. Take care.